looking for investments that grow even when the market doesn't. Today we're digging into Farmland Partners Inc., ticker FPI, a REIT that's literally grounded in growth. Let's start with the basics. Why invest in farmland? Farmland is one of the oldest, most reliable stores of value. People always need food, and farmland is where it begins. Historically, farmland has shown low volatility, strong inflation protection, and steady cash flow. According to USDA data, farmland has delivered an average annual return of 10 to 12% over the last several decades when combining land appreciation and rental income. That's comparable to the S&P 500 with less drama. Now enter Farmland Partners Inc., a publicly traded REIT managing over 171,000 acres in 16 U.S. states. Their farms grow a diverse range of crops, from corn and soybeans to almonds, citrus, and even avocados. This diversity helps FPI smooth out risks from price swings in any one commodity or region. FPI pays a quarterly dividend of 6 cents or 24 cents annually, giving it a forward yield of about 2.4%. It's not sky high, but that's the trade-off for a REIT focused more on asset growth and capital appreciation. Financially, Farmland Partners is pretty healthy. Assets are around $1.1 billion. Their debt levels are moderate and improving. For the first quarter of 2025, their funds from operations, or FFO, was $2.3 million. Their revenue mostly comes from leasing farmland to over 100 tenant farmers, which creates steady, predictable income. FPI trades at a PE of around 29, which is high for a REIT. But again, farmland REITs are often asset-heavy and income-light, so we look at FFO instead. It's best compared to REITs like land or even timber REITs like WI. In recent news, FPI has expanded into agricultural lending, giving them more control over their income streams. They're leasing land for renewable energy projects, solar and wind, tapping into another growing trend. They've also been strategically selling parcels to recycle capital, reducing debt and boosting shareholder value. The big picture? Food demand is expected to increase 50% by 2050, while arable land per person is shrinking. That's a supply and demand mismatch, and farmland values could soar. Plus, institutional investors like Bill Gates and Harvard have already been buying farmland like crazy. FPI gives you access to this elite asset class without needing to buy the farm. So if you're looking for a defensive asset with long-term upside, Farmland Partners might just be worth your attention. Smash that like button if you learned something new, subscribe for more deep dives into smart investing plays, and comment below. Would you invest in farmland? This is Simplify Finance, helping you build wealth from the ground up. Catch you in the next one.